This Chapter 3 video goes over how to calculate gross pay and taxable pay. Gross pay was done in the previous chapter. This chapter focuses on taxable pay, but in order to get taxable pay, we must need to calculate the gross pay. So let's get to the example here. An employee works 42 hours, so we know right away 2 hours of overtime. He earns $40.50 per hour, and his employer pays times and a half the regular rate of pay for overtime hours. To date, he has earned $137,100 during the year. That's very important because we need to know the threshold, so the year-to-date earnings up to this point. He has requested that his employer withhold 7% of gross pay, which goes into a retirement plan called the 403B plan. All right, for this problem, we need to calculate the taxable income for federal income tax withholding and the taxable income for Social Security tax, taxable income for Medicare tax. And we do that first by getting the gross pay. So how we approach this is lay out the information. Here's regular earnings. It's 40 hours worked times the rate, $40.50, so we get $1,620. That's the regular earnings. Now we need to know the overtime earnings. And there would be other types of earnings like bonus, incentive plan, commissions, but there's none in this problem, right? It's just regular earnings and overtime earnings. So we have regular earnings already. Now what is the overtime earnings? Well, overtime earnings first, we need to know what is the regular earnings rate, and that's $40.50. And overtime is time and a half, so 1.5 times the regular earnings, $40.50. Then we get the overtime rate, $60.75. With the rate, we multiply by the quantity, the hours, 2 hours of overtime times the overtime rate of $60.75, and that comes out to $121.50. So we add the overtime earnings, this figure, to the regular earnings. So these two pay equals the gross pay, $1,741.50. All right, that's gross pay, and that's pretty much what we had done in the previous chapter. Now, in this chapter, we need to see how much of this gross pay is taxable, and we call that taxable pay or taxable income. And some of the items that is deducted from this gross pay may be taxable or may not be taxable. For example, you have retirement plan that is taxable for Social Security and for Medicare tax, but is not taxable for federal income tax. And I would like to refer you to a page in the book that gives you a very good summary. All right, let's go to the book. Look for this page in Chapter 3 and bookmark it. I will utilize this for my test quizzes and assignments. So this is a summary chart that tells you, okay, all these different items here in this column. The retirement plans, cafeteria plan, charity, dependent care benefits, flexible spending, medical savings plan, and so forth. All these different items, and what items is subject to federal income tax. So 401k plan and 403b plan, there's the letter N here. It means that it's not subject to income tax. So if the taxpayer takes money out of the paycheck, it's deducted from the paycheck, withheld from the paycheck, and goes into this plan, is not subject to federal income tax. All right. However, it is subject to FICA taxes and is subject to future taxes, federal unemployment taxes. All right. FICA is Social Security and Medicare tax. Next example, cafeteria plan. Similarly, it's not subject to federal income tax. So again, amount that's deducted from paycheck for cafeteria plan will not be subject to tax. And it's also not subject to FICA taxes and future taxes. So it's not subject to tax when it's a cafeteria plan, these three taxes. When money is taken out, deducted for charity, it is subject to federal income tax. It is subject to Social Security and Medicare tax as well as federal unemployment tax. What about, let's say, flexible spending account? Flexible spending account is not subject to federal income tax, not subject to Social Security and Medicare taxes, again we call FICA taxes, and is not subject to federal unemployment tax. All right, so bookmark this and let's go back to the example. In the example, we had arrived at gross pay, $1,741.50. Now, this could be all subject to tax, or maybe a portion of it will not be taxed. So this could be all, again, all of it could be 100% taxable income, or likely a portion of it will not be taxable. So we would take out that portion, subtract that portion that's not taxable in order for us to arrive at taxable pay or taxable income. And here we have 403B plan, that's the retirement plan, and the taxpayer takes 7% out of gross pay. So 7% times the gross pay amount, that comes out to $121.91. And this amount, is this taxable when the taxpayer takes money out? No, this voluntary contribution for retirement is not taxable. It's not subject to federal income tax. As we've seen earlier in the chart that I went through, the chart from the book. Let's take a look at that really quickly. Here it is again, 403B plan. It's letter N here means no, not subject to federal withholding tax or federal income tax. However, note that it is subject to FICA taxes and future taxes. So we confirm that this 403B plan, savings for retirement, as the government encourages us, the taxpayers, to save for retirement plan, and they do not tax money when we put it out for a contribution to retirement in the 403B plan. Because the amount of contribution to retirement plan, $121.91, is not subject to federal income tax, we take it out of gross pay. So the gross pay here minus the contribution to retirement plan gets us the taxable pay or taxable income for federal income tax withholding. So this amount, $1,619.59, is taxable for federal income tax. So we have the first answer to the sample problem. Taxable income for federal income tax withholding, that is right here, $1,619.59. That's the taxable income or taxable pay for federal income tax withholding. The amount of income that's taxable is less than what was earned, the gross pay. Gross pay was what was earned, but not all of it is subject to tax because a portion of it was contributed to retirement plan, and therefore the amount that's taxable is less than the gross pay. Next, we need to find out what is the taxable income for Social Security tax. So there's a tax called Social Security. And what is the income that is subject to this Social Security tax? A very important note is this tax has a threshold limit, meaning that the earnings during the year, when it reaches this threshold, any amount of income above this threshold will not be subject to Social Security tax. All right? So that's why in the problem, it gives us the earnings year to date, 137,100. And then with this pay period, the taxpayer earned $1,741.50, which we had calculated before, and that's the gross pay for this pay period, right? So you add this figure to this figure, which is done right here, 137,100 plus the current pay, 1,741.50. That gets us the current year-to-date earnings or pay. And we compare that to the threshold. So we subtract the threshold, which is 137,700. That's the wage threshold. And so this number plus this number, the total pay up to now, minus the threshold. And we have exceeded the threshold by this much, $1,141.50. So in this pay period, we had earnings of $1,741.50, right? This amount, as a part of that balance, is not subject to Social Security tax because this balance makes the year-to-date over the threshold. Therefore, it's not subject to Social Security tax. And we see the calculation in this line here. Taxable pay for Social Security tax. And here's the current pay of this pay period, $1,741.50. How much of that makes the wage exceeds the threshold? $1,141.50 of that is not subject to Social Security tax. And so 600 of it, this number minus this number equals 600. 600 of this current gross pay in this pay period is subject to Social Security tax. And the answer here is 600. That's the second answer to the sample problem. 600 goes here. And the very last one is, what is the taxable pay for Medicare tax? The taxable pay for Medicare tax is the same as the gross pay. So this pay period, we earned $1,741.50. And all of that is subject to Social Security. And all of that is subject to Medicare tax. All right? That's different from Social Security tax because Social Security tax has a wage threshold. And because our current pay brings our year-to-date over the threshold, and a portion of it will not be taxable, but a portion of it is taxable for Social Security tax. It's still taxable for Social Security tax. That is $600. Whereas for Medicare tax, the full amount of the current pay is subject to Medicare tax. And we know what is the rate for Medicare tax, right? That's 1.45%. And Social Security tax is 6.2%. So in order to get the tax, we take those rates times these taxable pay or taxable income. So 1.45% would time this number, and then 6.2% would time this number, the 600, in order to get the amount of taxes. This is just calculating the amount of taxable pay or the amount of taxable income. So just to note again, the 403B retirement contribution, $121.91, that was not taxable for federal income tax. However, it is taxable for Social Security tax and Medicare tax. That's why the amount of the contribution to the retirement plan, it's in this number, and it is subject to these taxes. All right, it's part of the taxable pay for Social Security tax and taxable pay for Medicare tax. However, when we do the federal income tax withholding, we take it out of the gross pay. We subtract $121.91 from this number in order to get us the taxable pay for federal income tax. Okay, we didn't do that for Social Security and Medicare tax because even though it's retirement plan contribution, it is still subject to Social Security and Medicare tax. In your chapter assignments, you will have other items besides the retirement plan that we just gone over in this sample problem. You have other items like cafeteria plan, charity contribution, flexible spending account, union dues, and so forth. And you need to consider whether it is taxable as part of taxable pay for federal income tax and FICA taxes, FUTA taxes.